Hey traders, Jason here from Levitt Brothers. So in this video, I'm going to show a handful of breadth indicators that are starting to hint that we may be close to a bottom and a reversal pretty soon. Okay, breadth, of course, just takes account of how many stocks within a group or an index are meeting some sort of criteria. So for example, you might look at the S&P 500 and say, is it above or below the 20-day moving average? A breadth reading would look beneath the surface and say, okay, how many stocks within the S&P 500 are trading above or below their 20-day moving average? Sometimes you get, at turning points, you often get different prints. And I often find that the read beneath the surface is more accurate than the read at the index level. So I'm going to look at a bunch of breadth here. They're not necessarily in good shape, but they're in less bad shape than they've been. So that's starting to tell us that the market is, the sellers are kind of losing some of their downside momentum. Some stocks are starting to perk up, and that usually is an early warning sign that the market is going to reverse. All right, let's get into it. All right, so here is the advanced decline line for the entire market. It is a 5-day moving average. Just noting here, okay, so first of all, divergences take place and they should not be ignored. There are several divergences here, like, for example here, market higher high. The blue line is the S&P 500. The indicator is down below, market higher high. Less, advanced decline line declining, and what happened? The market moved sideways for a couple of weeks. Okay, and you can see this kind of plays out in several areas. You had, like over here, you had market moving higher high, advanced decline line lower high, much lower high, and what happened? The market moved sideways for like about 2 weeks. So moving over to the current area. So what I want to point out is, within an uptrend, and the market's been in an uptrend, for most of the last year. We're already close to October, so it's been almost a year since the market bottomed. So we got bottom here at 0.5, bottom here 0.5, bottom here 0.5, bottom here 0.5. So we fell recently to a level that is consistent with previous market bottoms. Okay, so that low is there, that low is there, that low is there, and now we're getting another low over here. So if things play out, if this is a dip within an uptrend, this is a level that would be consistent with sufficient enough drawdown within the uptrend, and now we're getting a bounce. So we'll see what happens. This is the 5-day moving average. The fact that we're above 1.0 tells us that over the last 5 days, advancers have beaten decliners. We'll see how it goes, but if the market has any health left, we should get a bounce very soon. All right, here is the 1 month high-low. High-low obviously being the difference between how many stocks are making a 1 month high versus how many stocks are making a 1 month low. Once again, we are at an area that, if the market has some health, it should turn around here. Okay, so we had a low. The market has made an obvious lower low here, but with the indicator, we made a little bit of a lower low, but it was pretty close. It just tells you things aren't necessarily great, but they're certainly less bad. Okay, if the market was super weak, we probably would have gotten a print down here at minus 2,500. So it's something to keep an eye on. Okay, again, market not great, but it's starting to get less bad. Less stocks were able to push to a lower, 1 month low recently. So that's at least a first sign of a possible turn. All right, same indicator, okay, but we're going to do 52-week high-low instead of 1 month high-low. And we're getting a very similar read, okay? So you can say back here at the end of last year, bottom near minus 500. Here went below 500, but then recovered pretty quickly. Here, minus 500. And now once again, minus 500 here. So those lows pinpointed, there, some weakness there, and now here. Okay, so within an uptrend, this is an area that has produced tradable bottoms in the past. We'll see how it goes. At the very least, again, and I'm going to say this over and over, the market's not in great shape, but it's less bad than it's been. And this is consistent with an area that has been a turning point. So if we take this chart, this is the 1 year chart. Let's back it up to 2 years. So exact same chart, 2 years. So I want to point out that in an uptrend, we got bottoms at the in the minus 500 level, but within a downtrend, we got a lot of prints down here at much worse levels. So if indeed if we come back over here, if indeed this minus 500 level sticks, then the market should be okay going into the end of the year. Okay, then we can treat this like a dip within an uptrend, and the market should be fine. But if it breaks down below minus 500, give it a little bit of a wiggle room just like this. But if it breaks further down, kind of like what we got over here at the beginning, during 2022, then we're going to be in for a bigger I would say a bigger correction, but then we're going to be in an actual downtrend versus an uptrend. So if it sticks, we're in good shape. But if we start getting prints down here, then we're got a downtrend on our hands. Next up, Russell 3000 stocks above their 5-day moving average. Just a quick one here. Things are getting less bad. Market lower low. Stocks above their 5-day moving average. Less bad. It's not in great shape. This is a 2-day moving average, but it's certainly not as bad as it's been, or it's not as bad as it could be considering the selling that has taken place over the last couple of weeks. So it's another subtle hint that things are starting to turn maybe. All right, one more indicator here. Here's Russell 3000 stocks above their 20-day moving average. Okay, divergences work here. But like the other ones, I want to just look at the actual lows. So we have lows here, here, here. So the depth of this drop here is definitely consistent with previous dips within the uptrend that have taken place over the last year. So this is a place that the market could turn, but I want to back this up to the 2-year chart. And similar to before, you'll notice that in a downtrend there were a lot of lower prints over here in single digits, whereas in the uptrend, within the uptrend, these did not drop to single digits. These got close, and these were these were closer to the high teens. Okay, so if we can stick here and not go much lower, then we should be good as a dip within an uptrend. But if we start getting prints down in here, then that would imply the market is in a worse shape than we think, and then we're probably going lower, and we're probably going to actually have a legit downtrend rather than just a pullback within an uptrend. Okay, so the market's not in great shape, but we're starting to get some signs that it's less bad than it's been, so we should get a reversal soon. Doesn't mean a reversal is going to go for weeks or a month or whatever. It just means we should get a reversal soon, and then we'll just listen to the message of the market. Strong opinions not welcome right now because we could get a big move in either direction. Listen to what the market's trying to tell you. Try not to have too strong of an opinion. All right, hope you got something out of this, and I'll see you next time.